And I just always ask them why. Because you lost money in the stock market? That's not bad. Never, ever, ever, ever recommend they have to get one with a bonus. Welcome to the Guaranteed Retirement Guy Show. My name is John Stevenson. I am your host. And today we're going to be talking about bonuses, premium bonuses, as well as income benefit base bonuses. There is a difference. They both can be beneficial and they also can be detrimental depending on what you are looking for. Okay, so I am walking around here and then you can see Genoa Falls behind me, and I hiked about 3 miles to get up here today, but I wanted to kind of show off the area to you because it's beautiful and it's worth seeing. So here's the trail. This is one side of the trail. You can see over there's another side of the trail. See the falls way up there. And I'm just going to take you on a tour. I had a guy reach out to me. I literally have people reach out to me about bonuses every week, probably every day. And it's always because they're looking for a bonus and they're like, I want a bonus. And I just always ask them why. I mean, do you want a bonus just because it's free money? Okay, that's fine. You can do that. Do you want a bonus because you lost money in the stock market? That's not bad. If it's a premium bonus, yeah, it'd be nice. What if you lost 15% in the market and you want a bonus 15%? There are some products out there that'll do that. You could, let's say your $1 million goes down to 900 grand. And you're like, dang it, I would like to get that money back. How do I do that? Well, throw it into a bonus product. Let's say 15% off of 900 grand. That's going to put you well over the $1 million account balance when you log in and see your money. It's pretty nice. Now, the downside of doing that, though, is you're going to have the rest of your gains, your future potential gains, they're going to be limited more because the insurance company wants to get that money back somehow, and so they will do it by limiting the amount that you can participate in the indexes after that. So if you're looking for long-term growth, I usually never, ever, ever, ever recommend a premium bonus. Now, there are times where a premium bonus, you just have to have it, because a lot of times when we're doing replacements and you have a surrender charge, we have to have a premium bonus. Otherwise, the insurance company will not take it, because if you're not made whole, they're gonna be like, no. So for replacements, you have to have a policy that's at least 2 years old, and you need to have surrender charges that are at or below the bonus amount. So, and you can do that. And when people do replacements for that, they'll do it primarily because they want the highest income. And it's great because the product they have is not an income product. Most of the time they reach out, it's not an income product. If it is an income product, the income's way less. And so it just makes sense for them to do a replacement because they're not doing it for growth, they're doing it for income. And in order to get the new product that gives them the higher income, they have to get one with a bonus. And so it works out very, very well for that. If you're looking for higher income, those bonuses can also help bolster your account that is used to generate the income. What happens is, for instance, let's say you put $100,000 into an annuity. Let's say the bonus is 10%. So you've got $110,000 sitting in that account right away. Okay. Now there's a difference between a premium bonus, which is what they put in, according to whatever amount that you actually dropped in that account, and then a income-based bonus. An income-based bonus is just a phantom account. It's an account that they use. It's still very valuable, but they use it just to generate income. And so what they're going to do is they're going to have you log in, you see your account balance, $110,000. Great. At the end of the year, let's say the index receives no growth. So it's $110,000 still at the end of at the end of the first year. But let's say there is a 10% roll-up rate, okay? And there's a 20% bonus for the income benefit. Well, that's not bad. Now you got $110,000 multiplied by 20%. That is $22,000, and you got $132,000 multiplied by 10% roll-up rate. Let's just say that's what it is. Sometimes they're 7, sometimes they're 8. Okay. Now all of a sudden, at the end of 12 months, $145,000 at the end of 12 months, regardless of what the index does. So if your account balance is still at $110,000, that's the account balance. Okay, that's your death benefit if you were to die. But the amount that's actually going to be used to generate income is the benefit amount, which is now $145,000. Now you got the $145,000, and this is simple interest. And then you'll continue to have $13,000 added to it each and every year. Or if it's compounded, then you'll have that 145,000 multiplied by 10% again. Now it's 14,000 added to it, and then you have the higher amount multiplied by 10% again, and over and over and over. And then of course you got withdrawal rates, 6 or 7% or 5 or whatever it is, depending on if it's joint or single. That will be multiplied against your benefit base. So you might let that benefit base grow for 5 years, and now it's worth $500,000 multiplied by 5%, giving you $25,000 a year in income. Now that's an example. Not saying 100,000 is going to give you $25,000 in income in 5 years. I don't know. You have to go to my annuity calculators and see for yourself. But I just wanted to kind of explain how these how these bonuses work, whether it's a premium bonus or a benefit-based bonus. Sometimes you can get both. Sometimes you can get one or the other. Sometimes it's just a premium bonus, and then you have a nice roll-up rate on top of that for income. It's not bad. You can also get both, or you could just get a benefit-based bonus. So no premium bonus, still $100,000, but maybe they give you a 25% benefit bonus. And now you've got an income value account that's worth $125,000, and then that's multiplied every year by a roll-up rate of between, 6.5%, 7 to 10% every year. So that's really nice. And that's what you use to generate income, because that is going to go to a sizable balance, and that's going to be multiplied by a withdrawal rate, which will give you lifetime income depending on when you decide to take it. So anyways, if you're looking for growth, don't do a bonus if you can help it, okay? If you have to get out of an old contract and you got surrender charges, that's one thing. But if you just got money and you want to get growth out of an index, do not take a bonus product. Don't, okay? You're going to get your growth is going to be throttled in the future forever, okay? So don't do it. It's best just to get a really good index like the S&P 500 index with a company that is known to have a high renewal rate, meaning if they give you 60% of the S&P 500, the chances of them giving you 60% next year and the year after that and the year after that are very high. That's what you want. Otherwise, there's a lot of these companies that will give you a high participation rate of like 100% or 200%, and then they'll lower it to 30% the year after. Okay, or they're with indexes that won't make you anything anyways. So a lot of these indexes are brand new, or they're back tested, or they're a variation of the true index, but they're not the true index. So that's for growth products. Anyways, there's a lot that I said there. There's a lot to unpack, and I get it. If you want to book a call and you want to purchase an annuity for yourself, but you're just not sure, what to ask, then book a call. You can always click the link below this video, and it will go directly to my calendar. Otherwise, you can go to my website, check out the annuities, and see which ones are paying the most, and then you can reach out through that medium. I mean, if you want to book a call through my website, you could do that. If you want to email me, email john@johnstevenson.com. I'd be happy to help. So, any questions, let me know. If you want to comment below, you can do that. If you like the video, make sure you subscribe, share, click the like button, and I'll be here. Love to help you. Here's one last view of the beautiful Genoa Falls, and it is awesome being out here. It's awesome talking to you. I hope that you are finding value from my videos, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.